Hey everybody, Jeff Sutherland and Chase Waldron with eXp Realty. We're going to give you our monthly market update ending at the end of July 2024. We got a lot to show you guys. Let's get right after it. And we're going to check out the market. I think you're going to be like, wow, things are starting to look up. First of all, let's take a look at this graph right here. The market cycle. We're coming out of a really bad run, and now hope is starting to materialize. You can see that even with your buyers, right, Chase? You've had a lot of buyers say, Chase, let's talk about buying. Let's get this on the roadmap. People are excited again.
Yeah, 100%. People are wanting to get going. People have been on the sidelines, and really it's been a good time for buyers because there hasn't been a whole lot of competition on the buyer side. So buyers have been able to come in and, do a little bit more negotiations, than they were able to do previously. And so that's definitely been a benefit for them.
Yeah, coming out of some skepticism, now we're moving towards hope. As you know, real estate is a cyclical thing, and we're really excited to see what happens now. And just in the past month, you've seen a few times where we've had some pretty big sell-offs in stocks, and when that happens, people get a little bit concerned, right? They get a little bit concerned over possible recessions and things that could happen, even some more joblessness claims. Unemployment has not been as good as we'd hoped. And whenever you have about 3 months of unemployment that doesn't look very good, that starts to trigger recessionary worries. So I want to set the record straight in the real estate side. What happens typically during recessions? A lot of people don't realize this. Over the last 7 out of the 8 last recessions, housing prices have not gone down, my friends. They have not gone down. They've either stayed flat or they've actually grown. So the last time we had a housing recession where houses declined was during the Great Recession. And that wasn't necessarily caused by the real estate industry. It was caused by banking and lending, people lending homes to people that had no jobs, had no doc loans. It was a crazy time. And there was a lot of money lost during that time. And I lived it. Trust me, I was with a lot of people that had to sell their house. It was not a very easy time, but look and see over the past, and the past is a good indication of the future and what happens during recessions. One last thing about recessions, typically when there's bad things happening in the economy, that usually triggers mortgage rates going down. Bad things in the economy, mortgage rates go down. What happens when mortgage rates go down, Chase?
The prices tend to go up. It brings
That's
more
right.
demand into the market, and that drives prices to go up.
Yep. So don't be so certain that housing prices will continue to drop. They usually go down in the summer, which is a very seasonal thing in Arizona. In fact, that's our next slide. You'll see, just like most years, our listing prices go down in the summer. People just don't really want to move in the summer, okay? And this is a seasonal thing that happens in our market almost every year.
Yeah, we're seeing a lot of it. I mean, even open house traffic, not a lot of people are coming in. They're not wanting to be out and about a lot of times during the day. So, I mean, it makes sense when you think about it, being here in Phoenix and it's hot.
Yeah, and so at the end of July, we were sitting at 346 bucks average per square foot. Now, keep in mind that does include luxury property, so it's a little bit skewed. If you take out over $1 million property, you'd see that drop even lower. So just keep that in mind. Okay, and that shows you the different years and what that looks like. It's very cyclical in our market. Now, let's look at the mortgage rates. I do foresee the mortgage rates continuing to go down. I think they're going to go slowly dropping down in 2025. We've had some good news as of late. Again, the unemployment figures didn't look so good, so you've seen some decreases. And by the way, Chase, let them know this is just an average, right, of like 6.54%. That doesn't mean everybody's going to get 6.54, right?
Yeah, definitely. I mean, there's a lot of different factors that come into the rate. Your debt to income ratio, your credit score, a number of different things. But I mean, we're trending in the right direction. A month and a half ago, we were getting people pre-qualified at 7.25 and maybe even a little bit higher, and now we're down closer to 6.5. So we're definitely trending in the right direction.
Yep, absolutely. That's what we're looking for sure. Now, I thought you'd be interested, my friends, on the median rent in Maricopa County in Q2 of this year. This is for a three-bedroom home, and we're looking at $2,108. And that has gone up over the years. And this is despite the rental supply continuing to grow, and the leases have not really softened. So we're around $2,100 for that median rent price. And you can see we have a good link there at the bottom if you want to check that out even more. And our supply for rents is also up. It's up 21%. And it's so we have 500 at this time of this broadcast at the end of July, 5,227 rentals out there with an average median price of 2108. Okay, so that's a little bit about the rental market. And then now let's look at you want to talk about this slide for a second, Chase?
Yeah, sure. So these are the gauges of basically the Phoenix market as a whole. Each individual, area is kind of a little bit different in its own sense, but this is taking Phoenix as a whole, and it's showing there on the left, it's showing that our supply is currently low, and over to the right, that gauge is showing that our demand is also currently low. So we are right at about balance, right even balance there at the gauge in the middle. It's showing that the Phoenix market as a whole is balanced.
Right. And that means some municipalities may be in a full-scale buyer's market, some may still be in a seller's market, but overall across Maricopa County and Pinal, because this is pulling from the multiple listing service, both of those counties integrate with the multiple listing service. This is what it looks like overall. Now, this is a better graph to see. I love this graph. You can see the price line, that nice pink line going way, way up, a correction. And as you can see, it's stabilizing. But look down at the green and the blue down here on the graph, and you will see the green and the blue have converged. So now we have a balanced market across the multiple listing service in both counties. And the normal is in this yellow area. So we have low supply, we have low demand, but we still have some cities that are in sellers markets. Okay. So as these rates continue to go down, as we predict, we believe that the supply, or actually the demand, will go up, right? And supply may not go up. It may stay constrained, or the supply actually may go down as rates drop. It's going to be very interesting to see what happens. Now check this out. And Chase has been all over the valley lately. The guy's like selling homes everywhere, and he's seen all these different markets. So it's really important that if you live in one of these marketplaces, you need to talk to us, because we have all the data on what's going on in every single city, right? Like what's going on in Queen Creek right now.
Yeah, Queen Creek is actually, technically in a buyer's market. There's a lot of stuff going to Queen Creek, but based on supply and demand, Queen Creek is a balanced market, or a buyer's market right now. So it's a good time for a buyer who's looking in that area. This would be a good time for them to look and check that area out, because there's a lot going on, but it is a buyer's market right now.
Yeah, and you even bought a house there recently, or
We
you're
did,
going to,
yeah,
right?
yeah.
Yeah.
Just locked one in, so we're going out there ourselves. So we're
Yeah,
excited about
yeah.
it.
So the man is like putting his money where his mouth is. I'm excited about that. I mean, as agents, what we're advocating you to do, we're doing it. We're both people that are active in the marketplace. So I think it's important for you to know that. So a very good graph there. And then look at our median sales price across the two counties. We're sitting at the end of July at $443,000. And right now that's this was pulled on August, in August, and this is so far this was 7 out of the 22 closing days of the month. So this was pulled towards the beginning of August. And you can see we had our big peak way back in 22, peaked out at 477, and now we're already back to 443. Isn't that crazy, Chase?
Yeah, yeah, moves fast.
It does. And because of the rates going down, we're seeing more and more buyers coming into the market as rates trickle down. It's kind of exciting. Not to mention, by the way, if you're ever interested in assumptions, we actually know quite a bit about that too. So there's other ways to get good deals out there besides just the regular stuff you see on the market. We know how to get people into assumptive loans, things like that. So you got to have people that are on the inside that are fighting for you. Okay. And meanwhile, buyers be like, I'd like a price reduction. I'd like some credits. And that's exactly what's going on. What's going on here, Chase?
Yeah, so this shows the average number, or the average value of concessions that buyers are getting. So a little over half of the transactions right now are getting buyers concessions, and the average amount that they're getting is right around that 10,000 mark. Could be a little more, could be a little less. Just about a month and a half ago, we were able to negotiate over $14,000 in concessions for our buyers. So, where we're at in the market, it's almost expected that, hey, there's a good chance that a seller might have to kick a little bit towards that, towards the concessions for the buyer. So, it's very interesting, and it's definitely a benefit for the buyer not having to, come out of pocket as much on those closing costs and other items like that.
Yep.
So
And both of us have studied extensively on how to negotiate fiercely for our clients, whether they're a buyer or a seller, because we fight. We fight for our clients. That's our fiduciary duty. So we try to get as many concessions as we possibly can. And as you can see, 53%, around 55% in August of people are getting concessions across the two counties when deals are done. That's like over half. So it's something that's very prevalent. So we're going after those when we negotiate these deals. And you can also see these are the highest price reductions since 2022, and then look all the way back to 2014. We're in a high price reduction environment. We're in a concession environment. It is very negotiable right now. So now is a great time to buy because we're coming out of that despair into that hope. And we just see a lot of hope. And we've been battling through this market. And I'm proud of the fact that we are here. I've been around for 24 years, and we are excited. We are excited to keep helping you with your business decisions with your home. Days on market. Now those are up too. Look at that. The last time we had this many days on market was way back in 14, and we're sitting here now. I'm sorry, also in 2023, that was up a little bit too. But right now we're at 2024 numbers are at 37 days. That's how many days it's taking between the time you put a listing on the market and there's a contract for the home. And then finally, cancellations. Cancellations. There's been a lot of listings put on the market, especially in the summer. And I think sellers are finding out they're asking for too much. And buyers are not going there, because they want to get the terms that they want. So we're seeing more cancellations as we pursue or go through the summer, and you're going to see some more strength enter the market as we get into the fall. So a lot of things going on right now. I want to remind you that collectively, Chase has been doing business in the real estate sector for many years. Together, I think we have over 30 years of background in the business. You can call us non-obligation consultations. We want to just get to know you and find out how we can support you and your family. Chase, is there anything else you want to throw out there before we sign off?
yeah, like I said, just reach out. We'd love to tell you, a little bit more about how we work with buyers and sellers. We can talk through our VIP buyer programs and the offerings that we extend to our buyers that we work with. We'd love to talk to you about it or about your local market. So feel free to reach out.
Have a great day, everybody. This is Jeff and Chase from eXp Realty. Have a great day.